Our final panel for the day, and what a panel it is. Not just because it's an all-encompassing topic about the present and future of the finance industry, but also because of the kind of experts we have over here, be it from retail, finance, energy sector, or the employment sector, we have it all. So without taking further time, let's just dive headfirst into the conversation. So Mr. Agarwal, let's begin with you. What is the current trend of finance right now?
I think throughout the day, people have been discussing a lot about how uncertain times we are living in. But if I talk about finance and in particular the leadership structure, uh, I think these are very uncertain times. There is a global challenge that we all are facing in terms of inflation. The world's biggest economies are going through recession or likely to get into recession. Uh, in India, I think we've been fortunate that, or rather unfortunate to say, that we've always lived with a high level of inflation, so per se it does not affect us as much as the world believes it is affecting them. But definitely, in terms of how the future looks ahead, in terms of how consumption is going to grow, how opportunities are going to get transformed, and especially because of the digital disruption, there are a lot of things which are changing on the ground. What was true 5 years back is no longer true today, and what is going to get true tomorrow, we do not yet know. So I would say that it is extremely, challenging times, but at the same time, from a very optimistic point of view, I would just want to add that with a lot of challenges also come a lot of opportunities. And I am a firm believer that whatever goes down also has to bounce back and has to come up. As an entrepreneur, as a finance leader, as a management leader, I think it's all our responsibility to bounce back, and not just bounce back, but also prepare for that bounce back. So that's far more important than just to ponder over what has gone wrong.
That's very true. Challenges are a separate, different name for opportunity. When there is no challenge, there's no opportunity. So with that, Mr. Nagesh, I have a question for you. You are the CFO of Randstad India, which is essentially a recruitment and placement company. So how does finance impact your space, and what are the trends that you are noticing in the current economy? Do things like inflation and the fluctuating rupee against dollar ratio, does that impact your company in any way?
So, good evening, everyone. First of all, some of these macroeconomic indicators impacts everyone, right? So we are in the business world. Things around inflation, rupee, the behavior of our customers impacts us. But specifically on the staffing employment side, the last 2 years have been very, very different. I think for most of us, it's the once in a lifetime event. Things have changed drastically. We have been forced to think differently. Coupled with the great resignation, people have been relooking at what their priorities are. The fact that after the lull during COVID, the economic situation has had a huge spurt. So last 2 years, particularly from the industry I come from, it's been a very, very busy season. Last 2 years, significant growth. A lot of people have been changing jobs, which obviously all of you know as well. Economy is helping. The priorities of the employees, what do they want, what do they do not want, they have got a lot more narrowed down. People are reevaluating what do they want from their life. So a lot of it has helped industries like us, and we are probably no stranger to a lot of other companies in the industry. So huge growth in terms of the number of people changing jobs. We are both in the staffing, on that temp staffing and the permanent staffing. So in the last 2 years, while we have seen a rapid growth, we are also seeing some clouds around the corner, particularly when we see people hiring on the permanent basis on their roles. When people see what's happening elsewhere in the globe, a lot of it is sentiment driven. So we see some slowness as we speak. But again, a lot of people are on a wait and watch mode, and that also makes us a little more difficult to start making investments. So right now, I think it's a little cautious optimism, but optimism it is.
Yeah, that's the nutshell of life. Cautious optimism, but optimism nevertheless. So with that, Mr. Mehta, I have the same question for you. You are at the heart of the fintech space. And I know a lot has been spoken about it already, but if you had to summarize it for our audience here and for those watching us online right now, Can you tell us what's going on in the fintech space as far as finance is concerned, in a nutshell?
Yeah, a lot actually. Well, you call us as fintech or insurtech. I mean, we are in both the businesses. The first and foremost thing which is happening is the customer behavior. Consumer behavior is evolving rapidly, and actually coming out of COVID-19, we see quite a lot of different behavior. I think in the earlier panel it was talked about where the insurance propensity to buy is changing. That's true. The focus from the term or pure protection is moving away, and we see a lot of people coming back in the market. Demand is soaring. At the same time, we also see proxy banking firm or new banking firms coming up in fintech space, and you see BNPL or buy now pay later kind of arrangements. In a month, actually, approximately 10,000 crores of worth of business is done through BNPL nowadays. Right, so that is there. And accordingly, what is happening is that the regulator is, of course, realizing on the back of the data available now that something need to be done. And in both the side, on the NBFC side or RBI side as well as the RDA side, the regulation is evolving pretty fast and quick, and for good. So that is one big change which is happening, and that's where the businesses need to be more agile and think in the right direction so that same mistake is not made twice. Risk is managed. Another thing which is happening is that the big tech players, which is non-traditional fintech, well, there is no traditional fintech, but non-traditional banking firms or insurance firms are coming into, for example, you say Google Pay, right? So Google has more data about us than we have. So if they come into underwriting either the borrowing or the lending space or maybe insurance, they will be creating a different kind of competition. So data would be important, and that could be one of the key driver, key change in the industry that may be coming. Apart from that, we of course earlier talked about changing shape of workforce, changing shape of customers. I think to sum up, it's a very exciting time to be in business because that's where the opportunities are created. And as Nagesh said, optimistic, right? That's what is required in this space. And we are hopeful that businesses will be making full use of this opportunity. Thank you.
Indeed, India has become the land of business and startups now, as we can see in your case with Policybazaar and other fintech companies that you're associated with. So, sir, lastly, proceeding towards you, I wanted to ask you, where does finance and the energy sector meet? And what are the trends and how has this shaped the energy sector in the coming years?
Good afternoon all, my name is Rohit. The most prominent trend that comes to my mind right now is that when did Delhi start dressing like Bangalore? I worked for 10 years in Delhi, but last 5 years I've been in Bangalore. And today morning when I was flying, I had to take my necktie and suit. But I'm clearly feeling quite overdressed right now in the conference, thanks to my friend Anand. But the times that I used to be as a finance professional in Delhi, used to see suits and tie, but obviously things have changed. Jokes apart, coming on energy and finance. As far as renewable energy is concerned, which is specifically covering the sector that I come from, there is a very deep relationship with finance because these are extremely capital heavy businesses. If you see the kind of investment that we are seeing in the sector right now is phenomenal. It's very rare for an industry. It's once in like probably quarter century that you will see a period like this where every year you are seeing billions of money coming into the sector. And this is the money which is used to create real capital expenditure. So you will see on the ground there are solar panels being installed, there are wind turbines being installed. In fact, one of the key issue with the sector right now is that there is huge amount of investment which is chasing the same opportunities which are available, and that's essentially the concern. Because there is global commitment on net zero, this is a sector where everybody is interested. We are seeing a phenomenal amount of capital inflow into this sector. And that is a challenge in any such environment where you have too much capital chasing the same set of assets. And especially for infrastructure sector, which are heavily debt dependent, unless the cycles or timings are well, they can have a very negative impact when the cycles go bad. And this is something that we have seen across infrastructure sectors. So having started with the negative, of course, there is a huge responsibility on the CFOs or finance leaders for industry like this, where they keep on ensuring that sustainability is kept on mind, long-term focus is being given due importance as against short-term. And last but not the least, as I said, specifically for the sector right now, the trends you see, there's a lot of focus from the government side. We see a lot of opportunity to grow in the coming years. And not just grow, I think from a climate change perspective, also adding a lot of positive in terms of the overall business growth.
Yes,
Urvi, if you allow me, one
Yes,
important factor in my sector, which may be interest to the guest here. How many of you would have invested in fintech, listed fintech? Stock market? Yeah. Just one? Well, a couple of them. Right. So one of the things which is burning nowadays in fintech is will this company will ever make profit, right? And that's where too much capital chasing actually too many assets, right? So the deluge of capital that is actually drying up on the back of thinking that whether they will ever make profit or not. Well, I mean, there are certain business models where there's a perpetual loss happening. At the same time, please understand this thing, that in this kind of business, the investment is done by way of operating expenses, which ultimately show in a loss, right? This is the nature of the sector, and that's why you will see those investment coming in the bottom line only. And that's where the fintech industry is. Every one of, you read newspaper, everybody is talking about cutting down on cost and showing a path to profitability, right? And the making unit economics positive is one of the big thing which the entire fintech industry is working right now.
Right, so there's plenty of opportunity and a lot of work that is being done in the fintech space and finance space in general since the economy has reopened. And as you mentioned, there's a lot of reshuffling going on. So with that, a lot of development also comes a lot of challenges. So let's talk about some of the issues that crop up and how we are able to address them. So Mr. Agarwal, let's begin with you. What are the challenges in the finance space today? Especially since the economy has opened, a lot of leaders are looking to revive and revise their sense of leadership and how they interact with their team. So what are the challenges they face in this regard and how are they overcoming it?
So it's a laundry list. It's too big an answer to suffice or to give in 5 minutes or 2 minutes. But definitely, let me make an attempt, and I'm sure my fellow panelists will also sort of pitch in. But at the top of my mind, I think the biggest challenge is how do you sustain profitability in these very challenging economic situations? How do you make the right capital allocations? You have to prepare for growth. You have to invest ahead of the curve. So which are the areas where you really go after, and which are the areas where you really cut costs? The other big challenge is digital disruption, as my friend was just mentioning, that fintechs and the entire digital space has been disrupting on the back of easy or free money, as people sort of used to call it. But definitely that dry powder is now drying. But I won't say they have done a lot of damage, but definitely what they have created is a plethora of opportunity for a lot of new ideas to mushroom and grow. And that has also created a lot of opportunity for many youngsters and many new people to get on board and do very different sort of things. And that creates, I would not say a lot of challenge, but definitely creates a lot of disruption. And for businesses to grow, that disruption needs to be matched with equal vigor. So it's not about digital taking over physical, but I think it's more about how the two will co-survive or become phygital. And that is what the old world will need to come to, and that is what everywhere we are talking about. The third big challenge is about the changing mindset of people around work. So people have been used to work from home. People have gotten used to work on Zoom. But as we get into the next phase of life, next phase of evolution, I think it will become even more challenging to how to balance this and still create a very perfect harmonious ecosystem of balancing ideas and debating and discussing physically or omnipresently as one can to make things work. The last, at least it's not just the last, but definitely one of the other big challenges that we have also been facing is around global supply chains, and how some part of that will trickle in, if not it has already trickled into a lot of industries, whether it is a tech space in terms of supply of chips, or whether it is automobiles, or for that matter even the industry that I come from, retail, where we produce almost 100% of the product that we sell out of India, but still we are impacted by global supply chain disruptions because our suppliers use machineries or raw materials which come from outside. So just to give you an example, cotton prices had gone up by 160% in the last 1.5 years. And in the last 3 months, they have started to come down by almost 20% every month. Now, this is a fallout not of national politics or national issues. It's a fallout of geopolitics. Now, how do you hedge? How do you create situations, or how do you manage situations to tackle some of these? And these are some very top-level thoughts. But I am sure there are many, many more challenges which are facing very different and very diverse industries. Thank you.
That's a very broad overview you've given us, which lays down the path for more specific questions. So with that, Mr. Rohit, I would like to bring you into the conversation. Mr. Agarwal has spoken about some general challenges. But if I have to talk specifically about the energy sector, what are the issues where energy and finance are converging right now?
Yeah. So see, on the energy front, if I have to get about very specific issues, as I mentioned, this is a sector where macros play a big role. So if you look at the industry, right from starting, we need to import, at least till last year, there was a lot of import on the solar panels which used to happen. Now today, the way the exchange rate is going as importers, unless you have done your planning well, you are hedged, there's a huge hit. Second is, there is a lot of hardcore commodity which is being used in all of this, whether it is aluminum, steel, when we talk about wind turbine. Commodity cycles, the way they were in the last 6 months, it has gone for a toss, which means again for a capital heavy sector, you are having your input cost going up like anything. Third is, you need long-term debt to finance all of this. And what we are seeing there in the last 4 months is, see, we have got used to days of extremely low interest rate. And I think the most important challenge that we used to face was to keep on telling everybody again and again that this is not going to be the life for next 20 years. What you are today getting is probably a one-off aberration where we are getting debt very cheap, but it's not going to be the same. Now, unless you have been one who has thought through this, you have had a mix of instruments which are fixed rate for long term and certain portion of your debt which is variable, you might run into a serious challenge right now. So specifically for the energy sectors today, if I have to talk, all 3 items which I spoke about, whether it is the hedging or exchange rate, commodity, interest rate, all 3 have suddenly gone bad. And typically what happens in an industry is that any one of them will be low, one of them will make things good for you. But we are suddenly facing this challenge where everything has gone negative. So that's, to be very honest, extremely challenging. The only point here is that businesses have to become very, very tolerant about these cycles. And which used to be the case, but now the intensity of the steepness that we see in cycles is very, very steep, which is not the case that used to be. That is becoming, honestly, a very big challenge for everybody in the industry.
Right, Mr. Mehta, I have a same but slightly different question for you. You are in the fintech space, which as the name implies is directly related to finance. So how would you contrast the problems that you were facing earlier, and how are they different from now? And what is your approach to solving them earlier as against now?
Well, let me tell you that I'm in this job only 3 months old. So I'm still, going through a cycle, and this is my personal experience, probably I can say here. Well, I was working with an insurer. Ever since 2000, I've been working in insurance. which means predictability, forward planning, to the degree that our idea says that you have to have the confidence of going wrong once in 200 years. That degree of confidence in your, future outlook. From that environment, I've come to an environment which is basically planning for the next day, right? So for me personally, challenge is unlearning. And I can tell you, unlearning can be very, very uncomfortable. At the same time, learning that things can be done in a very different manner. And these guys have proven, right? I mean, there's wealth to be created, there's a model to be created, there's a value to be created for customer, it's all there. So that learning is very, very exciting. That's on my personal side, but on professional side, the world, the traditional businesses basically are in the cycle of managing growth, the triangle of growth, profitability, and customer. Now you throw in few more balls for CFO, say control and risk management, right? This is how it is working. At least in this space, you talk about challenges. I think we don't call this challenges. We say that opportunities are emerging. And at the moment, the biggest opportunity emerging from the regulation. It will change something for us. Probably it will, make certain lines unviable, but at the same time, it will create another line. So that's how I think the whole outlook is changing from challenge to opportunity.
Certainly. So, Mr. Nagesh, my final question is directed towards you. When we talk about recruitment and employment in the finance space, so my question is that what are the skills that finance companies are looking for in youngsters or even financial leaders or those wanting to enter the space? And how are these requirements changing these times?
Right. I think some of the foundations of recruiting, I don't think has changed, which is around aptitude, which is about basic conceptual skills, which is about willing to learn. I think what we are looking to change is the way we look at people. And also the candidates who come to us, what are they looking for in a company? In the past, it was good enough for the candidate to know the brand. Now the candidate want to identify the brand. They want to understand how will it make a difference to their lives. They have got their own aspirations in terms of flexibility. Their patience levels are far lesser than what we are used to. Their expectations from a job is very different, right? Our expectations during those days was about stability, security. I think right now the expectation is a lot more immediate. They need immediate benefits, immediate rewards. The expectations from them is a lot more recognition. So we are adjusting our requirements to their needs. The question of lifelong employment, I don't think will be there ever to the extent we see. It's a lot more short term in terms of their outlook. The question for us is how do we attract them to us and how do we retain them? And we'll have to make those changes, whether it is about flexibility, work-life balance, our ability to give them that the career growth, the way they see it, is what is changing. Otherwise, I think some of those basics will never change in my view. Talent will continue to be recognized. They will also continue to look at companies which rewards them in the way they see, the way they perceive.
Yes, soft skills are the need of the hour. We have finance and tech already in place, and as we know, it is there in abundance in India. So with that, let's open the floor to the audience if we have any questions.
So as of late, we have seen that many banks for past couple of years are indulged in selling insurance policies. And as a recent example, Citibank retail division has stopped their operations and been sold out to Axis Bank now. And they are focusing more on creating wealth for the existing or the new customers. How do you see that the core company, which is into bank, the name itself is Citibank, has come out of its core job and is going into a new one altogether? What exactly do you see? And also my first question, that the banks are not doing banking, they are more into selling things now.
Okay, two good questions. First of all, Citibank retail division is not getting closed, this is getting merged in Axis, which means the banking continues. retail, they are basically merging the retail. They have sold off retail business to Axis Bank. And that retail business will continue under the edges of Axis Bank only. Now, if you look at it, yes, bank insurance has been one of the largest distributor of insurers, among, if you compare with how much is sold by agency, etc., excluding LIC. Predominantly, the bank insurance has been a very big channel. But at the same time, bank insurance revenue, in the overall revenue of the bank is very, very small, right? So it's not that bank is stopping banking and they are selling insurance. It's not like that. And if they don't do it, right, they are not fulfilling their customer need, the ability to offer the 100% or 360-degree kind of solution to the customer, they are not providing that. So that will not be wise, and in fact, it will not be efficient for customer as well. Now, the biggest concern about the bank insurance business is that there can be a mis-selling, right? Whether a bank seller is prioritizing insurance over any other good investment product. For that, the regulator as well as the insurance company as well as the bank have set up very, very strict monitoring mechanism to watch where the mis-selling is happening, not only reported, even the unreported mis-selling is also tracked by way of data analysis. And over the last 2-3 years, this has been coming down drastically. Very, very, it has reached to a pretty decent low number.
Right, I think that's all. So thank you so much, panelists, for joining us and providing your insights and quite a few facts, which I'm sure a lot of us didn't know earlier, which were so industry specific.